Hey everybody, hey traders, happy Friday. It is the 21st of January. What a Friday it's going to be. Welcome to the Poll Report. It's time to get started. Let's begin with a little risk disclaimer. Risk disclaimer? I think I said that right. Risk disclaimer. We understand the risk in trading. Please and always use trade capital only. Do not trade with money you can't afford to lose. You know the deal. Stocks, options, futures, forex, cryptocurrency pairs, whatever you're trading, you know the risks. Okay. All right. Good morning, David. Good morning, Wesley. What a wild day in the markets it was yesterday. Let's take a look at the SPY. Pre-market is down. This is actually good because my little straddle here, I've got the 470 put that is long and the 435. We're trading pre-market at 444. I'm going to take a look and see where my SPY is trading at. I had the expiration out to 218. My goal on this is to have my limit credit hit at $25. The kind of the exciting thing is if we look at the intrinsic value, 470 minus current price is 440.80 on the pre-open, 25.20. Now, if it was closer to expiration, my trade would be closing for profit because the put side alone would be worth 25 bucks. What I probably have instead is I know yesterday when I looked at it right before the market closed, my put side was trading around around like 17.70, $18 or so. I took this trade for 18.75. If I look at this today, we have another flush down to our yearly pivot at 440, our 200 EMA that I've been planning on trading towards for the last like 3-4 months. I'm going to see if I can get this thing up well above $20. If I get 22.50 today, I might end up closing this out for some profit. That would be about a $4 profit on the straddle, and that's good enough to close out the whole thing. Another one that I'm in is Apple. Apple's trading at 163, and I'm short at the 175. So same thing. This one actually goes out a little bit further, but do I think that Apple can come back down to the yearly pivot at 158 or down to the EMA at 150? I do. And again, same thing, $25. This trade was less expensive. This is like $15 and change. And I'm looking after something like $19 to $20 in profit and therefore about $19 to $20 in movement. Right now, I'm up about 12 bucks. So I'm watching these straddles closely. We talked about these all week in equities on demand. There are a couple of stocks we will be watching for expirations today. Nice to see everybody. Tron in the house. Fan is here. Daniel, what's happening? Good, good, good. Nice to see everybody. So let's take a look at the SPY really quickly because things kind of, if you're a fan of Anchorman when they had that big street fight, and then afterwards they're reminiscing about it, like things escalated quickly. That's kind of what the day was yesterday. I was teaching a class, and the last couple of hours, I just had all these chart alarms just flow in. I probably had 10 plus chart alarms in the last hour of trading yesterday. And look at this, from 11:30, 12:30, 1:30, 2:30 to close. I mean, we had like 4 hours straight bearish, and I'm not gonna lie, I had a pretty massive P&L swing. I was up like 50 grand on my portfolio for the morning, and then down about 5 grand. That's a pretty large swing in a day. That's more than, I mean, for me, that's more than a 1% swing. That's pretty severe considering usually it's, if it's an up day, it pretty much stays an up day. If it's a down day, it stays a down day. But this is a fade the rally move like we have, been waiting for. We've been talking about. So what's funny is people get so upset about like, oh my gosh, it's so bad. It's bear market, bear crosses. Where's the death cross? Where's everything? Is everyone goes crazy. But the reality is, this is what's been talked about. This is the correction that we think is very possible, and it might get worse, right? It might. It might not. We'll see what the market does today. I mean, we have levels here that I think we're in correction territory. That is no doubt. Right now, the SPY from the highs is down a whopping 7.4%. Okay. I mean, the index alone, like that's nothing. This thing could drop another, it could drop 15, 20% and still be in correction territory. If you look at the Qs actually crossed double digits. We're in correction territory now. Pre-market on the Qs down to 358. This one's down, I believe, 12 plus percent from the highs. So right here, we're looking at 11.3%. If we have a pre-market gap lower, that's at 12.32%. Again, it's correction territory. Bear call spread closed out for profit. Great trade on that. I am also long volatility. We'll see if the Svxy spikes up, the VXX, VIXM, any of those instruments you're trading. I'll also be looking at some potential bull put spreads on the SVXY today in class. So we're looking at I mean, think about it. Let's say that we get a 15% from high to low. Okay, we're 11.7 pre-market. We'll be down about 12 and a half. If we get to 15% right over here, That puts the QQQ around 346. If we come down to past resistance, that's around a 20% correction. Okay. Now, 20% is that cusp of like, oh, we're going into a bear market. Well, we'll see what the market wants as far as a dip. Is tech. What's really crazy? I saw this yesterday. What's really crazy is so the overall index is down like 10, 11%, but like 2/3 of the Nasdaq Composite are down like over 50%. Okay. So tech is getting crushed right now. And you want to know what's hanging on to it? You want to know what's keeping it elevated? It's the large concentration of Fangman stocks. It's Facebook, it's Apple, it's Microsoft, it's Amazon. It's the same stocks that broke away in the last 6, 7, 8 years and completely obliterated the performance of the typical market of 8% a year. And they grew like crazy. But now it's so concentrated because of these ETFs on the weighted index that it is just it's the house of cards. So I've said this for the last couple of months. If Apple starts to drop, then guess what? The whole thing comes with it, and that's what we're seeing, right? We're seeing Apple dropping, so is the index. We're seeing Apple dropping. Oh my gosh, it's not looking good. But other stocks are getting absolutely destroyed. I'm sure some of you saw Netflix yesterday. Netflix missed on earnings after hours and it gapped lower 20%. Okay, that's amazing. Because look, I mean, if you want to discount on Netflix, this is it. And I know that this might not be the perfect bottom. I don't know if it's going to be, open today at 402 or slide down to 400. Maybe Netflix just gets crushed a little bit more. But guess what I see in the medium term? Right? You buy Netflix, you dollar cost average into Netflix from 400 to 350 to $300. I would not be surprised to have this thing when it recovers rip back up here and fill this gap around $500, and that's a 20 to 25% upside. Okay, so right now I have a pending buy. It's a fractional share because it's a little expensive for this personal account. But I'm doing 2 shares at $400. If I get filled, fantastic. I also have a credit spread that I'm going to do the 410 by 405. Now I'm not going to accept anything less than $2.50. In fact, now that I see 250 and prices down to 402, what I might be doing instead on Netflix at 402 is if I get filled at the 410 by 405, I should probably ask for like $3 out of that premium. I feel like it gaps so low that we actually don't even have the prices and the options to catch up. So maybe this is a trade to get filled on next week. So what I'm going to do is I'm actually going to update this and see if I get $3 on my credit spread. And I'm just doing one contract on Netflix, but I put it in right here. I'm going to modify this. So I'm going to try to get $3. So $3. Let's see if we can get crazy with this thing. All right. So $3 credit. Let's transmit that for pending. All right, so I'm going to make a note of this on Netflix. A 410 by 405 full put spread, and it's going to be a $3 credit or better. And right now, with price trading at 403, I'm essentially taking a trade that is highest premium and it's in the money. So I should be able to collect more than $2.50 on this. And what I will do is I made the decision here. I've got the account size to be able to take the shares. So if I can use this, let's say that price drops to like 380, 360, 350, whatever, then I'll cash in that long put and I'll lower my cost. So I'm going to use this as insurance. I'm going out to March because I want to give this some time. I want to give this some time to recover because if I win, I'll make $3. But 318 expiration. So I give it some time to just not, I've got to be perfect on the timing. It's like, I'll give myself a little bit. I'll give this stock a chance to recover. But I also want to own the shares and see if I can get that 25% upside. So I'm pretty interested. Like, you don't see gaps like this very often. Amazon did the same thing. And, traders were pretty active with me last year. Same thing here in Amazon. Amazon's trading at 29.98. I'm going to throw in a little bit more on the fractional share side of things with Amazon. I'm going to put in a pending at, let's see if we get down to like 2,900 today. I know that seems like a lot, but this could be like a little bit of a bloodbath and a carryover from yesterday's fade the rally. Okay. All right. Let's see here. Tron up 357 pips on the Aussie New Zealand. Excellent stuff. Good stuff. Good trade. I saw that's up above 107. Yes. Let's see here. Following every day. Very good. There's a company trying to acquire Blockbuster from Dish. Can't remember the name of the company. Good to have. Okay. Yeah, let me know what you find on that. I'm interested in taking a look at it. So, look, some of these big tech stocks are going to be on sale. I will add to Amazon. I will dollar cost average into it. So, what was interesting about Netflix is this came and it's kind of like, stick it to them by trying to raise their prices. I mean, I was an OG of Netflix back in the early 2000s, getting DVDs sent to my house, uh, apartment rather. I mean, I was in college when I subscribed for like $4 to $5 a month, and those son of a guns raised prices like 3 or 4 times in the last couple of years. And now it's to the point where it's like, do I want to pay $20 a month for Netflix? No, I don't. Half the time on Netflix, and this is not a knock against the content or anything, but half the time I get on it, I just scroll and I add stuff to my queue and I add stuff to my queue and I never watch anything. After like 5 or 10 minutes of scrolling, I'm like, I'll just find something else. And then I go to YouTube TV and watch something or watch something on DVR. But I'm excited to watch Ozark next month, and I'll go month to month, and I'll be one of those, annoying little pesky subscribers where I'll pick my windows. I'll find a show I want to watch and want to binge, and I'll get it for a month, and I'll pay the $15 or whatever. But the fact that it's gone from $5 to $7 to $8 to $11 to $15 now to $20, I mean, that's not going to change. I mean, that eventually they're probably going to jack it up. And I'd say the HBO Max and Showtime and all the other streaming wars out there, the plus services are going to do the exact same thing. They're going to try to get you in cheap and then just going to slowly raise prices. And guess what? You're not saving any money. You cut cable, it doesn't matter. If you have like 4, 5, 6 streaming services, you're paying the exact same amount. And now you're on monthly subscriptions that you don't pay attention to. So I don't know. I'm like ranting a little bit, but this year I feel like I mean, trading is going to be really exciting. Trading is going to be a little bit crazy. Um, I mean, I'm looking forward to trading this year. I think it's going to be a challenge, but I think we can make some great trades, have some great opportunities. In stocks, if you're willing to hold for 1, 2 years, you're going to find some discounts and bargains. But I also want to work options. I want to generate some income. Forex, I think we're going to have some higher volatility and heightened volatility, which is great. It'll be interesting to see how this risk on, risk off stuff plays out in the Forex market. So, but Netflix, I'm going to take a stab at, see if I can get a trade down there, and then also buy some shares at 405. And actually, let me see if I can change that. So I put in an order. I'm going to get this one updated. I'm going to try to get it in like right around market price. And so, yeah, I mean, stock market wise, tech is just getting smoked. If anybody has a Peloton, I'm sorry. They should have given you 100 shares with the purchase of your bike, because now it's worth nothing. This is 85% down. And did I think that Peloton should have ever been a stock that rallied up to $170? Absolutely not. But man, did I wish I shorted the crap out of this thing at these kind of divergent highs at 140, 150. That would have been a lovely short to infinity. So anyway, do I think that Peloton has some merit? Maybe, but I'm not touching this thing. I mean, they have fired like 3,000 people. They're talking about less units, and they're halting production, and they're halting hiring. So they're in a world of hurt to like you know pinch pennies and try to salvage something positive. But holy crap, like that is what potentially tech can do. So that is called unicorn euphoria to reality. And I'm not saying that all tech has to do this, but this is why I'm picking and choosing the strongest stocks I can find this year, because that is what I thought Peloton should have been, which is like, yeah, it's like a $30, $40 stock, not $170. That's ridiculous. Most people that work out at home are going to have a 1 month commitment and then they'll freaking stop working out, right? They'd rather have like the magic pill to make them skinny, because it takes like 6 to 8 months to change your body. Should that help body? Maybe. Maybe it might help body. Body's trading at $1.75. I would say this. Who said that? Wayne. Yeah, I'd say this. It can't hurt. I don't think it can hurt body. $1.75. Come on, man. This thing's oversold and stretched. We got a gap up here to $4. Let's see what we can get. Okay. All right. So we'll see what happens. But like I said, just this is the crap that's going on. And things get a little crazy. The market gets nuts. There's going to be higher volatility. I'm hoping at this point, if we had this run up, I'm going to go to the VIX really quickly. Then we'll go to cryptos. The VIX is trading at 27.28, which I think is great. I'm going to take a look when we start class at 10 o'clock for equities on demand. I'm going to look at the SVXY and go probably out another 2 to 4 weeks and see if this volatility spike up continues, try to cash in a long put, and then get repositioned in the SVXY. But if this VIX rallies and I have the VIXY, oops, the VIXY is pre-market 1788. My break even is 24. And I know that I'm kind of asking for a lot for this thing to rally up to highs, but we have a yearly pivot here at 33. So do we need to have a big spike up to have my VIXY in profit? Yes, but I don't think it's impossible. In the VXX, same thing. I got positioned down here. $15 is still pending. That didn't get filled. That was close, but not quite there. That was 1605 was a low. Actually, no, 1750 was a low. We're trading up at 2185. Another one that I'm just going to set some chart alarms on at 30 and see if we go out for some highs and ultimately hit that yearly pivot. And then the VIXM is another one here that has some really strong support off this $30 level. It's trading at 30.90. You're not going to get like the big move on the dollar side of the VIXM, but you can trade this, very much close to the VIX. So if you like long volatility, strong support here at 30 bucks. This thing jumps up a couple dollars, make $3-4 a share. It's pretty awesome. And then SVXY, we're going to look at this one because we are dropping. I'll probably look at like a 57 by 56 and see if that fills for 50 plus cents and use that move to get back down to these levels. Let's say $50 or lower. Use that long put, cash it in, lower your cost basis, and then if we saw the VIX top out and then start to retreat, then we see the SVXY stop and start to go back up, and we can flip this for some profit. So I do think we're gonna have higher volatility, and get ready for it. Okay. All right. So we'll talk about that more in class at 10 o'clock for equities on demand. Let's take a look at some cryptos. I did get some chart alarms going off overnight on Bitcoin and Ethereum. Bitcoin is at 38,333,335. My next level, and I had this setting with a chart alarm, 35,000. I added at 40K as it slid through last night. I'm looking at 35K if we hit it, and I'm looking at 30K next. Okay. So I'm just going to remain dollar oriented or level oriented, like I keep talking about. I know this has room to slide. You know, I don't know what, I mean, I obviously don't know what the masses are thinking about cryptos. But if you ask me, I mean, technically, I think that this resistance to this support is a trader's range, right? So we come down here looking for some support to hold. It would make sense. I'm not saying that we can't go lower. I'm not saying that we can't find this yearly pivot at $20,000, but I would say that I would be a little surprised to have it flush so aggressively that it starts to do like massive structural damage below 20 grand. Right. I mean, in fact, I'm not sure what the mining costs are, but I'm pretty sure they're up above $20,000. So if we come back to it, this tends to happen. We have, price goes up, mining costs elevate a little bit, but price comes back down to them. And it finds pivots along the way. It finds pockets and inefficiencies, all that good stuff. So we have resistance. We have support. I like 35. I like 30. Dollar cost average in. If it goes lower, 25, $20 cost average in. I'm going to still build. I'm going to still accumulate. And if we go back to this high, guess what? That's a massive return. If we break and go to new highs, that's a massive return. And the song and dance continues of how high will Bitcoin go. But right now, I mean, there's probably some people that are freaking out because, oh my gosh, I just started to buy Bitcoin and I bought it at $60,000. Now what do I do? Well, hopefully you didn't put all your eggs in that one basket at that top and you learn how to dollar cost average because you don't have to pick the tops and bottoms. You just have to stay active and invest. Okay. So I like dollar cost averaging, and I really am bullish on this thing for the next 5 to 10 years. I don't know if I'm going to like ever let go of Bitcoin. If I have profits on my peripheral coins, I'll probably just roll that into Bitcoin and Ethereum and probably do like a 60-40 split, maybe a 70-30. I mean, honestly, I'll tip my cap to Bitcoin as kind of the original mover, and if we're going to call it digital gold or whatever. But still, right now in the present, I like these levels. These stocks we have talked about, there's still a ton of premium around them, but they're highly correlated. And I just think right now it's probably not worth participating a ton in until we start to see some more stability in the lows, because I think that these stocks right here can outperform overall Bitcoin as it takes like more time to turn. We are seeing lower volatility, day to day trading ranges are a little bit tighter and lower now on crypto than they were in the past. So, but I'll still look at these stocks, of course. The video I did, it wasn't this week, it was last week. The video on my favorite crypto stocks. These were a couple of them. I did BTBT, MARA. I also talked about some big players like PayPal, MicroStrategy, Tesla, Block Inc. And that I think I gave like 10 or 12 stocks in there that I'm getting some exposure to that will have some, some influence or some effect of crypto, which I like. Okay. Kevin says it has bearish momentum, but you think the big money will step in. Well, I don't think it's the key of stepping in, Kevin. I mean, I think the big money is when you talk about big money for real, I'm talking about like government adoption, hedge fund, hedge funds can trade it now, but I'm talking like pension adoptions. That's the big money. That's like trillions of dollars. Think about like BlackRock and Vanguard and like the what, 5, 10 trillion dollars they have sitting in their funds. That would be where I think it becomes like the big that's the big money. I mean, if we're talking about legitimacy in crypto, you're talking about like the School Teachers of America and the United Auto Workers Union, like big freaking multi-trillion dollar pension funds. If that gets into like even 1% exposure into crypto, that changes the game. I mean, I think that is more likely to happen than Warren Buffett adding it to Berkshire Hathaway. Just my thoughts. I mean, maybe Warren Buffett saying over my dead body, which give it 5 years and that'll be a reality, but who knows? Maybe the guy off of Coca-Cola and Tootsie Rolls can live forever, or Seas Candy, I think is the other one that he has. So anyway, I love you, Warren, but we'll see. All right. But yeah, dollar cost average. I like the levels. Stay patient. Obviously, we're dealing with some high volatility right now. Also, one to watch is the TNX, the 10-year note. This actually dipped pretty hard today at 1.75, but we spiked a new high at 1.87. That's the 10-year treasury watching this. And guess what? I've had this on my chart for like the last 12 months. I said if we get the 10-year notes up here into 2.5%, 2.25%, the reality is this is where you see fixed income looking for safety. This is where you see that flip and that diversification of stocks, take a nosedive and bonds can rally for some safety. Now, I still think that bonds are a dead market. I think that bonds are going to do absolutely nothing right now to help traders other than preservation of capital, a little bit of principal stability, but bonds will not return what you want, in my opinion. If you have bonds that are fixed at 1%, 2%, like crap returns, and you're dealing with real, okay, real inflation, probably around 10 to 12%, weighted inflation, transitory inflation, the Fed's trying to, give us data points on at 7%, still the highest in 40 years. And it is likely going to stick in the US more than others, right? And it's crazy. Like it's going to be a weird year. It's going to be like an expensive year. Prices are going to go up, and I am going to be cheap this year. Like if I don't need it, I don't want to buy it. That's kind of my thoughts, and I hate it because that shouldn't be the case. And if you want to take a vacation, want to take a trip, but my gosh, man, like nothing's on sale. There's no deals. There's no bargains anymore. It's like you want a car. Everyone's wanting a car. Everyone's going to line up for 3 months to put down a deposit. It's like who's going to deposit on a car you don't even have yet? So I don't know, man. I'm just angry about inflation, but I think you should be. Interesting. I watched a video yesterday. A guy on YouTube, Graham Stephan. I follow him for the last couple of years. Awesome stuff, great content. And have you ever heard of the Big Mac index? Big Mac index is actually outpacing inflation and outpacing real estate and outpacing like other commodities. And it's interesting because it essentially has like all the major components of food that if this is getting more and more expensive, that just shows like it's so here's the Big Mac index. Okay. 1986. Where's a little summary here? Based on the theory of purchasing power parity, the notion that in the long run exchange rate should move towards a rate that would equalize the price of identical basket of goods. So think of it this way: the Big Mac at McDonald's, price wise has gone very much the same. Like, how much is it? $2, $3, $4, $5. I mean, now they have like they'll throw you some nuggets and some fries and a cookie and a Big Mac for $5 or $6. But to make it now, look at this. The Big Mac costs $5.65 in the United States. So the implied exchange rate is 62 cents. Difference between actual exchange rate, it's 15.9% undervalued. So basically, McDonald's has every Big Mac on sale. They're probably losing money on it, but the cost right now is going up. Okay, that's what I thought was interesting. So anyway, Big Mac index. There you go. It's a real thing. They didn't just make it up. Okay, let's talk about some other stuff. You want to get some other cryptos? Same thing with Ethereum. Bitcoin, level oriented. Ethereum, same thing. I have a pending buy. Coinbase Pro 2500. 2500, and again at 2000. I know we had those recent lows in 2021 at like 1850 or so. 2,500 right in here. 2,000, really nice round number coming back to these, year lows from 2021. That was right around 1750. And if I go, I'll just say, you know what? If we hit 1,500 and we hit 1,000, right? Because all I'm looking at is if this sticks and holds. Okay, we also have a yearly pivot if you want to make a note. 550. Okay, so do I need to jump in right now at 25? Probably. I mean, I will. Um, but it's going to be small. I mean, I'll probably take 500 bucks, 500 bucks, maybe 500 bucks, maybe another 500 bucks. Maybe I get a little bit deeper here and heavier on the $1,000. But when I started buying Ethereum, it was like $300. So I'm just going to stay pretty simple, level oriented. We're still falling on the left hand side of the trend line. Let's see how severe it gets, right? There's no reason to guess where the low is. So I'm trading small test levels, and then I can start putting the evidence together on the right-hand side when the price action starts to suggest that we're breaking the trend line and giving us a bull pattern. Okay. All right. So Ethereum level oriented, Bitcoin level oriented. The other ones are doing very much the same thing. They're all falling. Litecoin 122. Ripple I saw was back down to like 65 cents. Trading at 67 cents right now. XLM is Stellar Lumen. That is at 22 cents. Link is at $19.24. Look at the Doge. Doge is back down to 15 at that little 20% spike we had last week or so. And then Sheeb, anything exciting there? Plummeting. So, I mean, I don't think you're going to find, I mean, look, you can go to Coin Market Cap and figure out like, oh, there's something moving. And then you're just going to chase these crazy coins that maybe just popped. So, in the last 24 hours, I mean, look at this. The market cap, this is crazy. Like, I mean, I've done videos in the last month talking about the coin market cap, total crypto cap at like 2.07, 2.03, 2.01, still above $2 trillion. And here we are looking at it now at 1.8. So is there like a mass exodus of cryptos right now? Not necessarily. It's just as it depreciates in value, the total market cap in the spot price is changing the overall market cap. In fact, more people, more retail traders are getting into crypto. More people have had exposure added in 2021 than ever before. So, there's certainly more adoption going into it, and there are bigger players. There are companies getting involved. There are hedge funds getting involved. There are wealthy individuals getting involved, and it is very much a calculated risk that could probably outperform everyone's portfolio in everything. But it's going to take time to do that. We're going to have to eventually put in that low and stabilize, and then we'll have to see where the next big parabolic move is, or the next, great run to 100K, or we get triple digits and whatnot. But there is, real money going into it. Yesterday, I took a snapshot. There's an article for the Fed, CBDC. There it is. I just took a screenshot of this last night and followed the link. So Fed releases long-awaited study on digital dollar, but doesn't take a position yet on creating one. So I guess what the Fed is doing is they're very like neutrally saying that, yeah, we're entertaining it. Here's what we think. Here are the pros and cons. Here's the risk reward, and then they're opening it up for public comment. Now, I mean, here's my opinion. I don't want a government blockchain, right? I mean, if we created like a digital dollar or whatever, I don't know what that looks like. I don't know how. Yeah, I mean, I want it decentralized. I want privacy and I mean things you would want with like a decentralized network. But at least the talk is going on. I guess that's not a bad thing. But it's just it's yet to. I mean, if the Fed's not taking a stance, it's not really endorsing Bitcoin or cryptos. It's just here we are. We're in this interesting honeymoon phase of like, are we going to see digital adoption by major central banks? Or are we going to see them spin off into something else? So that's where the uncertainty and the question mark comes in. But I do think that at some point, like we are going towards a digital asset based future. So anyway, but if you want to read the article, I'll post it here in the chat. It's just more like this is what the Fed's thinking. I'll post that in the chat. Okay. All right. Yeah, crypto.com, Linda. Good question. I've been following that one as well. I saw was there a recent hack in crypto.com? That's what I read yesterday. So we're at 0.39. I don't know if I mean according to crypto.com, they said that there were like 400 accounts compromised. That seems on the low side. Maybe it was higher than that. I think I read this on either Morning Brew or in StockTwits. Um, but anyway, I mean, look, cryptos are falling across the board. Do I think I'd be interested in maybe throwing something? Oh, MicroStrategy, Disney, SPY. All right, we got everything busting out. Wall Street's open. We got some alerts triggering. All right, let's take a look. So, would I be interested in throwing something at 30 cents? Yeah, sure, maybe. If I can buy this on okay, so I got filled at $400 on Netflix. That's good. So, order status, I put in a pending buy at 405. I get filled at 399. So, that's not too bad. And let me see if I can get. I don't think I have good option setups. I'm going to take a look at Netflix really quickly while we're talking about it, since I mentioned it earlier. I just don't think the option prices are what they should be because nobody expected that gap to be that severe. So 318 is what I went out to. I was going to do the 40, actually the 410 by 405. The 410 by 405 bull put spread right now is trading at $2.12. And that's terrible. Like if this gets up to 250 or $3, I'm pretty interested. If it falls lower, maybe it trades for a little bit higher, but I just think things have to stabilize a little bit. But I'll figure it out. I mean, if I don't get filled on it by next week, then I'll probably cancel it. And I'll probably re-look at the trade or revisit the trade at a better price. If this thing flushes down into, 350, then obviously I'll look at a credit spread that's a little bit lower. But I'm trying to get filled and use this 405 long put as insurance to lower the cost basis if we continue to flush down. Okay, that's what it was. It was 34 million stolen. It was a compromised account. So anyway, does that hurt the overall coin? I don't know. All I'll say is this: like speculation wise, would I throw some money at a 30-cent crypto, crypto.com Coinbase? Sure, probably. But that's about it. I mean, honestly, at this point, I'm less interested in the altcoins. I think there's probably going to be like a collapse in some sense of the word, where you'll have the cream of the crop that will stay stable, okay, and then you'll have all the other ones that just go bye bye. I think so. You might have like maybe 5 to 10 coins that become more legitimate, more adopted. Maybe that's the mainstream portfolio allocation, and the other ones like Doge and Shiba and other ones like they're just I don't know. If they don't have some scarcity or don't have some utility, then they might just go away. So, but again, I don't know. I don't know. I don't know for certain. There could be tons of speculation. There could be, ICOs forever, but who knows? Okay. So we have some chart alarms. Disney, let me take a look. Disney is dropping. Probably interested in scooping up some Disney now. We're at 139. And let me see. I think I had some pending orders on Disney. If not, I don't mind adding a few more. So right now I am in Disney. And let me see where my break even is. So this is all fractional stuff. Disney, I have 6 shares at 175. All right, I'm going to throw in another probably 5 shares. Let me see here. So it's at 140. We're probably dropping down here to 135. Let me see if I could just put a fill at 135. Gap filled there, 139. I mean, I'm trying to time this perfectly. It's like if I get filled at 135, that's great for another 5 shares. What's that going to cost me? 135 times 5, 675. Versus if I get it now at 139.85 times 5, 699. All right. I'm just going to throw it in right now. So I've got it. Get it over with. I like Disney. HMC. Sweet. My debit filled today for some profit. Excellent. 10-cent debit on HMC, made 82 cents on that trade. Good. Look at this. Even with the market collapsing, it still makes some money. That's not bad. Disney, stock trading at 139.47. And I will buy. Nothing crazy on this account. I'm going to throw in another 5 shares. And let's go 139. So bid is 134. So 130. Let's go 139.55. And I'll throw some more in Disney. Is higher than the quote 139.06. Well, by all means, fill me at 139.06 then, you turds. Okay, 139.16. Sure, take it. Well, just fill me, would you? Come on. 130, whatever, dude. Just fill me where you can. Give me a better price. And then it rests, of course. So I'm looking for that one to get filled at 139. Let's see what I have. All right. Can I throw in some more on Amazon? There we go. So filled at 139 on Disney. Amazon trading at 3,000. I'm going to put in a pending around 2,900. We have a yearly pivot at 28. Okay. So got a little add on to Disney, added some Netflix, and trade that I talked to with a friend of mine. We actually got into Snap as well. That's actually a pretty good trade, I think. Credit spread out for some time if it drops a little bit more. So anyway, whatever. I mean, I'll save this for class. What do you want to take a look at? HMC closed for 10 cents. Yes, it did. And that is a nice little profit on HMC. What I will take a quick look at while I got you here, we do have some expirations today. SLV is going to be one that hopefully stays above $22. SLV is silver, 22 by 2150, and that is up in profit. Hooray! So another one with markets dropping, but you've got some exposure and diversification, and that is profit. So that's about I did 2 contracts, and I think I got 25 or 27 cents on the credit spread. So that's a little $50 win. No big deal. SLV is trading at 22.68. So we're well above the strike price. Nothing to do on that one. Let it expire. Get your full profit. So HMC, good stuff. SLV, good stuff. I think I have an Alcoa expiration this week and maybe a Pfizer one. Let me double check. Pfizer, I have the 49 by 48, and that is also in profit by $50. Fantastic. And DNUT, that one goes out a little bit. This one's barely in profit, but I've got some time in this one. I was just trying to close it out for profit. XOM filled at $1.40. Okay, good. So I got those Jade Lizards filling on Chevron. See if I get the other one filled on Schlumberger. We did some energy plays this week in equities on demand. Alcoa out to next week, 58 by 57. What happened? I think I have one this week. Oh yeah, this one's in profit. The 49 by 48 bull put spread. That's in profit. I'm up $500. So cool. Looks like I've got some wins. Not going to complain. So I have some profit this week. Pfizer, nice little win. Alcoa, nice little win. HMC, nice little win. SLV, nice little win. And picked up some great discounts on Netflix, Disney. I'll look for Amazon as well if I can get filled. And I don't mind dollar cost averaging to those. So I'll take it. 29.85 filled on Amazon, actually. Hooray, just like I said. So those stocks filled, and those are going to be profitable. Cool. All right, all right. Let it fall, right? I guess. And hopefully, now that we're talking about this, first thing just to come full circle before we wrap up for today, 445. Let me take a quick look at the put side of my straddle on the SPY. Because if that is trading over $20, I might just close the whole thing out. So SPY is right here. Boop. There's the SPY, up $140 on the whole thing. Now, that is a bear call spread in addition to the straddle. My put side alone, if I go put and put. So the 470 long put, the 435 short put, check and see what that is trading for. Drum roll, please. It's trading at 1820. All right. Now, let's see. Bear call spread, my max profit is $100. Oh boy, oh boy, oh boy. I'm just I think we've got a little bit further to go. I mean, that 200 EMA has not been hit yet. Okay, we have the 200 EMA, we have the yearly pivot. We can get down another $5. I think that's possible to get there today. I'm going to let that bad boy run, try to get that straddle part running to like $20 to $21. And I think it's worth protecting that, taking a close, because I could also kind of double up on the profits, take the put side off, make it a $2 to $3 profit overall in the straddle, and then still have a dollar credit on the bear call spread. So I might turn that into a $300 or $400 win on the SPY. Yep, we're not done. Tesla crossing $1,000. All right, I'll get back into Tesla at hopefully a much lower price. Tesla at 979. If we come back down and revisit this, $900, I'll let this one drop. And then currency pair wise, we'll take a look at the currency strength chart. Not loving the fact that the Swiss has gotten stronger, even though we have euro and yen. What I do like is that this is definitely a risk off day. We have the dollar at baseline. We have euro and yen and Swiss on top. Now, I don't love the fact that the Swiss is the strongest because I have some, plays against the Swiss. I am long CAD Swiss, and that's not doing too hot today. It's getting a pullback. I'm long pound Swiss. That's not doing well today. But Swiss yen, that pulled back today. My dollar Swiss, that's not doing well today. But I also have euro CAD long, euro pound long. We have pound yen short. So we've got some good trades running here. So I'll just do a quick review before I wrap up. So currency pair wise, take a look at the Aussie CAD is a trade that I am long in, starting to get long here at these equal lows, some small buys trying to take it back up to range levels. The Aussie New Zealand, as who said that earlier? Was it John or Daniel that said big money on the Aussie New Zealand, like 500 some pips? Where was that at? Sorry, I missed that. Or was it Tron? Somebody made some money on this one. We made money. We closed this thing out at 10. I closed it out around 107. And by the way, this was I forgot to add it up in my flex room this week, but this was probably worth like 2,000 pips because as this was falling, I was adding. As it was falling again, I was adding. So I took some profit here and added more. I took some profit here, added more, and took this last little run all the way back up to our weekly target around 107. It hit it, so mission accomplished. And we have done a pretty good job just tearing this currency pair up. So right now, if this pair runs up into the 107.50 to 10800 level, I like the resistance. I like the resistance. I'm going to look for this resistance to hold, and then we'll plan on selling this back down to my flex room. Okay, but awesome trade. And I know it took some time, but since around September of last year, August, September last year, built positions. And I mean, I probably had 20 open positions on this trade over the last 3-4 months and ended up closing out for a nice profit. So really nice. Built the break even was around like 105, 104.50 and ended up taking profit at 107. So added up very nicely. Aussie dollar. Is this one starting to plummet back down? Not really. It's still kind of that choppy range. I'd like to sell this one at the yearly pivot around 7,400. CAD Swiss was one of my better looking trades, and it's just pulling back today. Doesn't really change anything. If CAD Swiss drops back down to this level, I'll buy more. I'm not going to change my plan. Pound yen, this one should be up a ton of profit. Pound yen, we got in around 156, and this thing's down to 154. This should be up like 200 plus pips. I might take some profit here. My robot's running right now. The FX Wave Rider's running, so that one might take profit pretty soon at a 2-to-1, and then look for a pullback or flag and get back in, targeting 150. So 150.00 is my take profit overall, and I'll let the robot keep trading for me. Euro Swiss is down to 103.43. This thing can kiss my grits. But if it's this low, maybe a slightly lower low with divergence, I'm still looking for a bullish pattern. That's all I'm talking about. This is one that I've shared with traders out there that subscribe to the newsletter, the Pulver Report newsletter. I like the trade. I still like the trade. I'm going to still hang on to it. And this is my plan. It's just adding. BT, I'm not in that one. Euro dollar. So the euro dollar is holding bid right now. With the euro a little bit stronger, we probably have just a slow, grind to the upside, maybe back towards 116. And then I'm looking for more downside, but I'm going to see if this one can retrace. We also have an awesome profit level, harmonic merge, a lot of confluence at 1.17, but we'll see if it gets there. Tron, that's what it was. Aussie, New Zealand. There you go. Good stuff, man. And then we're long on the EuroCAD. Okay. Picked up a position on EuroCAD long with FX Wave Rider. Fantastic. Picked up a long position on Euro Pound. Excellent. FX Wave Rider. Just turn on some robots. Did it yesterday in class. Euro Pound long, EuroCAD long. They're in, they're active, and they're in profit. So love that with some room to run. Pound yen is in profit. Pound dollar is in profit. So looking good. So we have actually a lot of trades running there looking for some sweet, sweet, sweet profit. Let me bring that up really quickly. I'll wrap up here in just a couple of minutes. Any last requests before I go? I'm just going to log into my VPS and double check where I'm at in these positions. 468 on the pound yen since the 19th of January. That's this week, final. So that's really good. That's really, really good. Excellent trading. Okay, so let me get logged into this VPS really quickly. So he's asking about the report. Really simple. Go to the website. Pulverreport.com. Pulverreport.com. And right here where it says get access to my free newsletter, click on that link right there. And all it is an email. Sorry. Email to subscribe. There you go. And I send these emails out Mondays and Fridays. I have a pick of the week. It's a stock, it's an option, it's a forex pair, it's a crypto, whatever, whatever I like for the week. And then I recap everything on Friday. Like today, I'll send out an update. We have profits on Honda Motors. We have profits on Alcoa, profits on Pfizer, picking up some great discounts on Amazon, Netflix, and Disney. I just got filled in that credit spread, the 410 by 405 for $3. Awesome. Let that crap run. I want to cash in on that long put. Let's go. So again, like the good thing is, why am I doing this? Why am I getting crazy and active today? Because this is the time where things are available. Like if prices are finally in areas that I want to buy from, I got to take action. I don't care that the market's, crapping its pants right now. I need to find a way to, I want to buy Netflix at $400 or cheaper, right? I want to buy Amazon under $3,000. I want to buy Costco. It's been on a 15% discount. I'm going to buy Costco at the last slide. Microsoft is sliding. Apple sliding. Like, these are good. This is good. Do you want to keep buying the market? I mean, I did a video on this. 270 new highs over the last, like, I don't know, 6, 7 years, 8 years. 270 highs. Okay, that's insane. That's like 14, 15% of trading days are forcing traders to buy freaking highs. And this market has gone ballistic. So it makes sense. Like, yeah, a correction would be fine. It's totally doable and it should be happening. But what's funny is like nobody sees a market correction as healthy. Instead, they see it as like, oh my gosh, the world's ending. And it's just like it's just the screwy sentiment that the world has. And like we can't do anything without thinking that it's like all in and extreme. It's like extremely bullish or extremely bearish. There's no in between. As a trader, that's not true, right? As a trader, there's healthy market cycles. There's expansions, there's contractions, there's peaks and valleys, there's waves. You got to trade them. Okay. All right. So there's a newsletter. Just go to pulverreport.com. You can click on the link for my newsletter, and you'll get emails on Mondays and Fridays. Good stuff. All right. And then what was I going to talk about here? I've got the VPS. Let me get logged into that really quickly. And I want to take a look at those pound positions because they're doing pretty well. Euro CAD long, Euro pound long, and those should be running for some profit. Let's get it. And over this weekend, I'm going to try to bust in this. I've got here's me right now. Hey everybody. That's a green screen in the background. I'm going to have some fun with the green screen this weekend. See if I can figure out how to edit with it. I can't, like, this is a 5-foot by 6-foot green screen, and somehow like it doesn't cover my camera. So unless it's like, hey, now Chris is in a green screen, I've got to zoom into my face. So anyway, all right, pound US dollar up 94 pips and counting. Pound yen up 189 pips and counting. Let's see here. The euro pound is in a trade. It's up 18 pips and counting. The Aussie New Zealand is closed. The euro CAD we deployed over here. Euro CAD is in profit on this lower position here. Had a nice little turn. That's up about 35 pips. So I've already had some positions built into the euro CAD, but this one should be in some nice profit. Aussie New Zealand, we took profit. So we've had some good wins. That is for sure. All right, Kevin, we'll talk more about that next week. I'm going to dive into that Price Action Pro and Strategy 4. I know we shared it. Like I set the Pound Aussie up with that trade this week. In fact, Pound Aussie might be in the territory for nope, not yet. I was going to say it. I thought the Pound Aussie might be coming up here high enough to get into my sell zone, but it's not quite there yet. So we'll spend some more time next week on the Price Action Pro in class. All right, chart alarm's going off like crazy. And this is probably what the day is going to be. So Zillow, fresh lows. Okay. Buckle up on Zillow, buckle up on Pinterest. I did some credit spreads on ARC. I mean, credit spreads are going to help. I mean, it's one of my simplest strategies. I also am going to do this. I mean, I know that I probably have like 100 people watching right now. I'm going to do this. So I didn't post a video on YouTube this week. It is a lot of time to, like, do the research, write the report, do the videos, edit everything. That takes time, and it's just been taking more and more time to do it. So I'm not saying I'm not gonna do it. Obviously, I want to keep doing YouTube videos, but I'm gonna go back to the kind of the pure, like, lessons. I'm gonna change the name of the Keep It Seriously Simple. I'm just gonna change it to Trading 101 and just put a full like comprehensive playlist together on trade options, trade stocks, trade cryptos, trade currencies, and just trade stuff, trade stuff, trade stuff, trading 101. I've got a couple of those trading indicators A to Z videos already done. I can get those posted as well. So I'm just going to post more like educational content, timeless content. That to me is easier than like trying to follow the latest trends and do all this research. And I'm not saying I don't like being informed, but it's, I mean, I guess until my channel's like 100,000 subscribers or followers, I'm just going to put stuff that everybody can find. If you're looking for trading information, let's go to Trading 101. So anyway, just to let you know where I'm taking the direction of the video. Plus, I noticed the last couple of weeks, like the more kind of trendy stuff I've been doing, like talking about cryptos and doing like very popular like mainstream news subjects, and I'm doing that for YouTube. I notice I get like tons of spammers and like spammers that are in my chat and spammers that leave comments, and I hate that. So I'm looking for more like real followers, grassroots following, and just actually grow and have real subscribers and not have bots and spams. Yearly pivot on Microsoft. Good. All right. Look, here's the deal. The market's going to slide today. It is probably a down day. The SPY could go lower. I hope I close out on the SPY today. It'll be freaking sweet. I'm going to let this run. I've got the credit at $25. If it fills, awesome. My bear call spread's in profit. So even though the market is, I mean, it's awful, but it's long volatility. This is a correction we've been waiting for. This is good. So what you want to have, this is the best thing you can have. Cash at the ready, right? Cash at the ready. So when things are on sale, rather than saying like, I can't do anything right now, instead you're like, I've got money, I've got margin, I'm ready to trade, I'm interested right now. And you can actually pick up things on sale. You can buy when others are fearful. And guess what? Your odds of bigger returns are way more in your favor than trying to ride this thing out. Awesome. Ford, look, I mean, these are just chart alarms. Everything's dropping. Excellent. Ford is dropping hard at 2102. I'm going to buy more Ford, probably down here in the teens. Again, right? I took a trade from 475 all the way up to $24. Let this bad boy drop, get back in, lower the cost, and then have this thing. And if I buy Ford in the teens and I lose it again at 26, I'll be happy. Let's turn it into another $7-8 a share move. We made like 13 bucks a share. I made like almost 20 bucks a share on a couple of positions. So good. Let it fall. Find the stocks you want to own. Take a look. I mean, like I said, to start off this year when we kicked off the channel, I'm taking, the 30, 40 positions that I have or more, and I'm trying to find like, okay, what's my top like 15? What's my top 20? And just work the cost, like lower my cost if I can, make the profits where I can, generate the income. But I want a pretty inflation proof and, volatility proof portfolio. And it's not easy. But that's going to be my main focus, moving forward. We're going to be in some turbulent times, probably for the next, couple of weeks. We might have a rough quarter for this reason. The Fed's still looking to raise rates, probably. I don't think they're going to look at this and say, "Oh, the markets are down. We won't raise rates in March." No, they probably will, because inflation is kicking everyone's butt right now, and it's pissing people off. So they're going to raise rates. How far, how fast remains to be seen. They might raise rates twice instead of 3 times. But doesn't matter. They're probably going to raise rates, and the 10-year note's going to go up, and the market is going to drop. Good. It should. So let it drop and be ready for it. There's ways to take advantage of it. We've been doing that. We've been short on the SPY, short on the Q, short on Apple, short on Microsoft. We've taken some jabs at the market, and they're paying off really nicely. Okay. Chart alarm just went off, and I'm going to let you go. We have class in 7 minutes for equities on demand. So Ford, Microsoft, Zillow, BT, Tesla. Okay. Microsoft, let me take a quick look at Microsoft. I'm interested. Also scooping this one up. Percentage wise, I looked at this massive weekly fib, the 30 to 38% level. I would gladly pick up Microsoft if we come into like the 15% level. Right now we're at like 14%. We come down to this 30% level, that's 17.9, and 38%, that's a 20+% discount on Microsoft. Microsoft just did a big acquisition this week of Activision, trying to get more in the gaming situation. I know Microsoft's looking into the metaverse and all this stuff. So, I mean, I still think it's a pillar of a stock to own, but it certainly deserves a retracement because it has not had one. And also, I do have a bunch of bear call spreads running on some of these stocks that I've covered and protected profits on. So I have like a 290 by 295 bear call spread on Microsoft. If I get that one in a profit, awesome. So it actually, like, all this shaken out could be a very like lucrative couple of months where it's short-term trading, but it's nice profit protection, it's nice hedging, lower your cost basis, and then buy what's on sale. All right. I'll take a breath. Equities on demand students, I'll see you in 5 minutes. Thanks for being with me today for a long Pulver report to wrap up the week. But we made money, right? It was actually a really good week. Forex, good week. And let's see here. What is this? BOT. What just filled? Oh, Ford. Okay. I got a Jade Lizard filled on Ford. Okay, good. All right. I got some orders getting filled. I'm going to take a look. All right, buddy. And I'll see you in class in 5 minutes. Have a great weekend, and I look forward to seeing you all back here on Monday for another Pulver report to kick off the week. And I'm sure everyone's going to be happy that it's Friday, especially if the streets run red with blood. That everyone's just like, it's 4 o'clock. Is it 4 o'clock yet? Can we end the day? Can we stop bleeding? And look, it's okay. You'll be fine. You're traders. We'll figure it out. There should be ways to make money here. All right. So just like I said, keep the emotions out of it. Make sure you have cash and margin at the ready, and get ready to trade. That's what we want. All right, everybody. Have a good weekend. See you soon. Bye.